Welcome back to Explain the Charts, where we decode market movements to help you make smarter trading decisions. Today, we're taking an in-depth look at Meta Platforms, ticker symbol Meta, on this 21st day of July, 2025. We'll analyze the latest news and delve into Meta's intricate chart data across multiple timeframes, connecting the dots between fundamental drivers and price action. Let's start by looking at the broader picture on the daily chart, showing all available data. Before we dive deeper into the charts, let's contextualize Meta's current standing with recent news and events. Analysts are increasingly bullish on Meta, with several firms raising price targets, some as high as $750 or even $918. This optimism stems largely from Meta's aggressive investments and significant progress in artificial intelligence, including robust AI infrastructure and the release of their open-source Llama 4 AI model family. The company also recently settled an $8 billion shareholder trial, which is a positive development as it avoids potentially damaging testimony from Mark Zuckerberg. However, there are also headwinds. Meta, along with Apple, is a likely target for the EU's new antitrust powers, and they are challenging a major VAT claim from Italy, which could set broader tax implications across the EU. While Meta's stock is up significantly year-to-date, up over 21% from the beginning of the year, some analysts note that Nvidia's stock has now surpassed Meta's gains. Currently, according to recent Google search results from earlier today, Meta is trading around $712.36, indicating a positive start to the week. Now, let's examine the one-day chart to see how these events have influenced price action. Looking at the full range, we can clearly see a strong bullish trend for Meta throughout 2024 and into 2025, despite some significant pullbacks. Notice the sharp decline in late April 2024, where the stock dropped from over $500 to a low around $414 on April 25th, likely a reaction to an earnings report despite an overall positive trend. This level, around $415, proved to be a strong support, leading to a robust recovery. Another notable dip occurred around March 2025, falling from above $650 to below $600, followed by a bounce back. More recently, in early April 2025, we saw another sharp decline from the $580 to $590 range to the low $500s, followed by a strong rebound back into the $580s. The latest candle on this chart, representing July 18, 2025, shows a close of $704.28, which is just below the crucial psychological level of $700. This price point sits near a short-term resistance, as the stock has struggled to consistently break and hold above the $710 to $720 range in recent weeks. The 52-week high stands at $747.90, serving as a major resistance level to watch in the midterm. On the downside, initial support can be found around the $690 to $700 zone, which held several times in late June and early July 2025. Should this break, the next significant support lies around $650, corresponding to previous consolidation areas in March and May of this year. Longer term, the $580 to $600 range has acted as a strong base, especially during the rallies from late 2024 and early 2025, and would represent a critical level if there's a deeper correction. Let's zoom into the hourly chart to gain a more granular perspective on recent price movements. While the hourly data provided is a bit older, concluding on July 15, 2025, it still offers valuable insights into recent short-term trends and volatility. Looking at the period from July 10th to July 15th, we can observe a clear short-term downtrend emerging from highs near $737. The stock experienced significant selling pressure, breaking below previous hourly supports around $725 and $718. This suggests that despite the positive overall trend, short-term momentum has been to the downside, with sellers stepping in at higher levels. Volume spikes on these hourly drops indicate strong conviction behind the bearish moves within this time frame, highlighting potential exhaustion of buyers at those price points. This aligns with the daily chart showing a slight pullback from recent highs around $738 to the Friday close of $704.28. Now, let's pinpoint the very recent price action using the 15-minute chart, which gives us the most up-to-date picture up to July 18, 2025, Friday's close. Focusing on July 18th, we can see how the stock opened around $704.39 and experienced a significant dip early in the trading session, falling to a low of $691.65. This downward pressure correlates with general market caution at the time, but notice the swift recovery towards the end of the day. The stock bounced back strongly, recovering most of its losses to close at $704.28. This rebound on higher volume suggests buying interest emerged at those lower levels, preventing a deeper breakdown and forming a short-term bottom. The ability of Meta to recover from intraday dips, especially around the $690 to $700 mark, indicates underlying strength and buyer demand at those key support zones. So, what's the verdict for Meta? From a bullish perspective, Meta's relentless focus on AI, backed by substantial investments and leading research like Llama 4, positions it strongly for future growth. The analyst community's high price targets, some even pushing towards $918, reflect significant confidence in this AI narrative. The recent shareholder settlement also removes a notable legal overhang, allowing management to focus on core business and innovation. Technically, the stock's ability to consistently bounce back from significant pullbacks on the daily chart, like the one in April 2024, suggests strong underlying demand and institutional support. These dips have often been met with renewed buying, indicating that long-term investors are accumulating shares. Conversely, bearish arguments center on regulatory risks. The looming EU antitrust scrutiny and the ongoing VAT dispute in Italy could lead to fines or operational restrictions, potentially weighing on future earnings and investor sentiment. Furthermore, increased competition, as evidenced by Nvidia's stock outperforming Meta recently, reminds us that the AI space is highly competitive. In the short term, the hourly chart shows some recent weakness from the mid-$730s, and failing to quickly reclaim the $710 to $720 range could lead to further consolidation or a retest of lower supports. For traders, key price levels to watch are immediate resistance around $710 to $720, followed by the 52-week high of $747.90. Breaking convincingly above $747.90 on strong volume could signal a move towards the ambitious analyst price targets. On the support side, $690 to $700 is a critical short-term level. A sustained break below this would bring the $650 area into play, and below that, the strong historical support zone of $580 to $600 becomes paramount. When deciding when and what price to trade, always look for volume confirmation. Strong volume on breakouts or breakdowns adds conviction to the move. Pay close attention to upcoming news, particularly any developments regarding Meta's AI initiatives or the outcomes of its regulatory challenges. An impending earnings report, as mentioned in the news, could also be a significant catalyst for price volatility, offering both opportunities and risks. To recap, Meta is currently battling between strong bullish momentum from its AI advancements and potential bearish pressure from regulatory headwinds. The immediate resistance levels for Meta are $710 to $720, with the 52-week high at $747.90 being a significant psychological and technical barrier. A strong break above $747.90 would reinforce a highly bullish outlook, likely driven by overwhelmingly positive AI news or favorable regulatory outcomes. Conversely, Immediate support sits in the $690 to $700 range, a level it recently recovered from on the 15-minute chart. A sustained break below $690, especially on heavy volume, would signal a higher likelihood of testing the next major support at $650. Beyond that, the $580 to $600 zone serves as a robust long-term support, representing a crucial line in the sand for the overarching bullish trend. Always monitor volume. Large spikes accompanying price movements increase their reliability. Upcoming catalysts like future earnings reports and progress on AI initiatives or regulatory cases will be key to determining Meta's next big move. Stay vigilant, trade smart, and remember to like and subscribe for more in-depth chart analyses from Explain the Charts.